Shares of Netflix low today as competition in the streaming war heats up, and the stock has now turned negative for the year as a whole. Let's bring in Bernie McTernan, analyst at Rosenblatt Securities. Before I come to you, Bernie, Mark, I just want to come your view. That point, down 30% since July, down year to date. Is that justified in your eyes?
Well, I mean, I think the valuations come down because of all this new competition, right? You got Disney Plus, but I mean, at the end of the day, it's all. We don't think that it's a that streaming is a one company take all kind of market. We think you can have several winners exist. A lot of people are going to sign up for Disney Plus and Netflix, and I really think it all boils down to the quality of the content. Netflix has some engaging content, right? Yes, streaming is a trend that's going to continue to play out, but binge watching, in my opinion, is the more important trend. That's the addictive trend, and that's what Netflix brings to the table, is that addictive content that people want to sit in front of their TVs and watch it over and over and over again. And they got the Breaking Bad movie, let's face it. I mean, that's going to be a winner.
Bernie, why has the tide turned for Netflix's stock? How much has to do with the competition?
Yeah, it's really on revenue growth expectations. So this is a company where it was trading at 7 times revenue, but all of a sudden you have a 40% miss on the quarter. And then people are looking at, instead of 30% growth on the top line, you could be looking at high teens. This is the stock that's traded at 4 times revenue not that long ago. That would put the stock at $200. So I think that's a reasonable bear case to go from here.
You still have a $330 price target. How much of that is contingent on them being able to increase prices in the future at some point?
Yeah, we think that they're definitely going to take a pause near term in any massive price increase. The price increase they instituted this year was the greatest they've ever had. I think we're a long ways away from them doing such a massive price increase again, but with global subscriber growth slowing, pricing is going to matter more and more. So you should see the mid-single-digit price increases instead of like the 20% rate increase they took this year.
We had the Emmys last night. I mean, how much of the recognition that Netflix gets or does not get and loses to someone like an HBO actually matters for subscriber growth?
Look, shows matter, and that's what you saw this past quarter. Stranger Things was July 4th. I would expect if the company had to redo the quarter again in their content slate, they would have done Stranger Things that last week of June, and maybe we'd be thinking about Netflix differently than we are now. But content matters, and that's one of the reasons why we're so bullish on Disney and Disney Plus. They have content with The Mandalorian, with Star Wars, and they should be able to transition nicely to the streaming model.
Just on the Netflix point, though, you mentioned subscriber growth. Clearly, subscribers actually fell in the US, which was one of the big factors for the share price decline since July. If that happened again this quarter, how much would you be cutting your price target, or how much do you think that the shares would drop?
Yeah, so 2Q's seasonally weak for the company, so we wouldn't expect a domestic to go negative. But we have 7 million subscribers globally for the company in 3Q, 8 million globally in 4Q. That's 15% below consensus. And if we think consensus started believing what we did in terms of you're going to be looking at high teens growth sooner rather than later, that's when you could see the revenue multiple coming even more. And the problem with Netflix is that they're spending $15 billion on content, so that's negative $3.5 billion of free cash flow. So you don't have that free cash flow multiple to go on, and that's why the revenue matters so much.
But just to my question, if US subs did fall again 2 quarters in a row, how much would that spook the market?
It would spook the whole. I think stock's down 30% since earnings. I think it would have another similar impact because that would be even worse than what happened in 2Q.
Well, especially with that content slate, too. I mean, it was a much stronger content slate this quarter, right?
Yeah, Stranger Things.
Yeah, Stranger Things, Orange is the New Black, right? I mean.
Bernie, great discussion. Thanks very much for joining us.
Thank you very much.